Greetings, members one and all of the Salivation Nation. Gold and silver prices may have only one way to go. Let's explore. One may interpret the title of this video as being bullish on gold and silver, and that is the angle that I want to approach this video. However, certainly I think the opposite could be true. But we're going to talk about this from that bullish standpoint because I think there's a lot more that is working in favor of gold and silver, especially after what happened last year and what is continuing to take place as we speak. And working for silver and gold's price in the upwards direction than the other way around, especially considering what's going on with inflation. I'm going to be referencing an article from investing.com that talks about this, that has some pretty decent information about what's going on in terms of inflation, currency devaluation. And essentially, what does that mean? They're interchangeable, those terms are, but it means that our dollar, these debt instruments, are losing value at a faster rate and at a much greater portion. In other words, between 1 year and now, this dollar has lost 7 cents. 7 cents. In other words, this dollar a year ago would have been worth 100 cents, and now it is worth 93 cents. That should put it into perspective as to what's going on with the dollar. Now, gold and silver prices have fluctuated, especially silver, dramatic gyrations in the price, up and down. And by the way, if you look at over the course of that year, and especially when gold hit its all-time high in August of 2020, one can make an argument that, it is a losing proposition, especially silver. But you're looking at just one date and comparing two dates. With the dollar, yes, we did look at what it was from 1 year ago to today. But one thing that is for sure, one thing we can depend upon with regards to the dollar, that even by the very design from this institution known as the Federal Reserve, the dollar will always be a losing proposition. Now, I'm not one that trash talks the dollar to the point of saying that it is trash, because indeed it is not. You and I hold these notes. We work for them. They are stores of value, but they're stores of value that are essentially bleeding out. They are bleeding out at a faster rate these days. And what happens? What does the Federal Reserve do? They do a bleeding control. In other words, they still allow it to bleed out, but it's at a smaller pace. To a pace of 2% per year was the target before the pandemic, before all of this madness with modern monetary theory started. The Federal Reserve is in the business of managing the decline of the dollar. Now it's happening at a faster rate and a bit more than they certainly account for or hope for. They're trying to do their best to try to rein in the dollar as inflation, and that is what is going to be happening this year with a series of rate hikes. But we're going to talk about those rate hikes a little bit more from this article that I think is quite interesting. So price inflation is the evidence of currency devaluation. And when we talk about inflation, we talk about it with regards to the consumer price index. But it's not a real measure of inflation. It's methodically massaged, really, starting with the Arthur Burns Federal Reserve. It was essentially his idea to hide the real degree of currency devaluation from all the money, and has been printed since 1971. And what about the value of the dollar? Relative to gold, it has declined 98%. In 1971, $40,000 would buy a 4,000 square foot home in a good suburb. Now it takes $700,000 on average to buy that same home. So what is the true measure of inflation? Well, I've not really perused it, but there's a place called Shadow Stats that talks about what some of these real numbers are. Many people feel that the CPI report is a little more than a tool for political propaganda. The Fed has made the public's ability to measure the money supply considerably more difficult over the past 15 years. In 2006, the Bernanke Federal Reserve stopped reporting the M3 money supply, which is the most accurate measure of the money supply. You can't see M3 past March 2006. Early in 2021, the Fed changed definitions of M1 and M2. The Fed has done this to disguise the true amount of money supply that has been created over time. And the reason why they can do that is because it is that a lot of it's being digitized. So the digitized money or currency, they don't have to worry about tracking it or making it public to you. I'm sure they do track it, but it's not readily available to you, at least not easily. The M2 money supply has increased at an annualized rate of 20.2% since February 2020. The M2 measurement is now 90% of GDP versus 44.4% at the beginning of 2000. Staggering statistics here. In 2022, going into this year, gold is considerably mispriced relative to the amount of currency that has been printed. And silver, at a gold to silver ratio of 79, is extraordinarily mispriced versus gold. At least that's what this author believes, and I feel the same way. Now that the Fed seems intent on tightening its monetary policy, for the meeting minutes that happened recently, what happens to the price of gold when the Fed begins a rate hike cycle? Well, believe it or not, they're going to go up. There's a chart that shows what has happened. Now, this chart, I don't necessarily think proves its case, which is why I'm not showing it here. But one thing is for sure, they aren't really correlated as much. And so when rate hikes do happen, especially dramatically, we do see the price of gold go up. But there are blips in there where it kind of goes down a little bit some as well. But by and large, over the course of time, you do see it rise. There are exceptions, and they point some of those out, where they have lowered it and the price has gone up, and the other way around. It's interesting to see, but I don't think you can necessarily make the correlation. But the mainstream narrative that gold moves inversely with interest rates, in the modern fiat monetary system, gold rises when the Fed hikes and the Fed funds rate. And I think you would see more evidence of that based off the chart that was shown there. But again, there are exceptions, which is why I don't rule out the opposite scenario. And I'll get to the opposite scenario here too for a bit of a balanced view on this. So when the Fed finally acknowledges that price inflation is a problem that needs to be addressed with tighter monetary policy, flight to safety money moves into gold because the market has determined that the Fed is way behind the inflation curve, and the start of a rate hike cycle is a signal to the market that inflation is going to get worse. Furthermore, the Fed will not act quickly enough to get ahead of the problem. Since the 1990s, the Fed tends to start an interest rate hike cycle at a time when the economy is already rolling over. Gold's price rise along with the Fed funds rate is the expectation that the Fed will have to cut its rate hike cycle well short of its plan in an effort to re-stimulate the economy. And that's kind of what you can see what happens is when they do that, then gold kind of goes up. So there's weakness in the precious metal sector now, and to the Fed's shifting policy stance and the resultant essentially bloodbath in the stock market is what many people think could happen. This weakness in the metals will probably be short-lived, and the dynamic reflected will kick in. It just takes a little time. Again, what typically happens is as inflation hits, the rising of gold and silver happens on the tail end of it. Once it's entrenched, and people realize, there's no easy way out of this. And I think this is why the Fed has used the term transitory. They don't want people to panic. Once they realize that their tools aren't doing what they think it will do, and inflation stays where it is or keeps rising, gold and silver will only have one way to go, and that's up. Now, on the contrary, we very well could see that they do these activities, and it does bolster the dollar index, and gold and silver go down. I think that's a possibility, especially given the chart that they showed here, not really reacting the way we think it should, as far as necessarily always correlating with that. There's one area where the rates went down and gold went up, and vice versa. And so it's anybody's guess as far as to how this thing will play out, and as far as the way to go in the opposite direction. In other words, gold and silver going down. If the dollar remains strong and people have faith in the dollar, especially around the world, and there is a reset that occurs very soon, like within a year or two or even 3, and people are anticipating that new reset. In other words, we go into the global reset, and as part of that, currencies get reset, and the dollar there's renewed faith in the dollar. That psychological attractiveness to the dollar compared to other currencies, based off of this central bank digital system, in other words, some sort of blockchain, some sort of digital ledger system that reinforces the confidence of the American people and the world, you will see gold and silver go only one way, and that's down, because the dollar strength is the biggest motivator and mover of gold and silver. Now, that's not always the case. We've seen exceptions. I've talked about that on this channel. But nonetheless, I believe that could be a situation where gold and silver price may only have one way to go under that scenario. I believe we're going to have one or two of those scenarios. So one could make the argument, well, Sal, you've just talked about 2 different ways that the silver price will have one way to go. I mean, that's right. But I believe the former. I am bullish. I don't think that's going to happen. I don't think the reset is going to happen anytime soon. I believe they will only implement that system when it's too late and the prices of gold and silver are already up. In other words, I believe that they will fully tweak that system for social, economic, environmental, governance, ESG. They're going to really try to tailor that and get that in there as much as possible, and that's probably going to take some time to be able to implement those portions of it. There's a lot of policy that still needs to be hammered out, and there's also how it's going to interact with the IMF and other nations around the world and the dollar. In order for the dollar to remain dominant, that is the key to all of this. And that's going to be a longer road to haul for now. It's about the psychology of the markets. It's about people and regular people in the finance world and in market analysis and strategies and the like that really don't think the way you and I do in terms of that sort of situation. So they're going to have faith in that new system. And a reset of the dollar is going to be something that's going to be the saving grace, which could in turn essentially revalue it in terms of having that greater faith by the public, but not necessarily revaluing the dollar in terms of its spending power, but revaluing it in terms of its faith, which means that gold and silver could actually go down in that scenario. I think that's what they would want. I think in a way they would design it to be that way, so that they could look to us that hold these metals and say, see, we've got a new currency that people have trust in. So your gold and silver are pointless to you, are worthless to us, and really to you. So they're going to go down in price, and I think that is one situation. I think that's unlikely. I think if that does occur, it's going to be too late. So that's why I think really they have only one way to go. But a lot could have happened between now and that reset of the currency, and the markets could move in strange ways. But if the Fed starts to rate hikes, I believe that you may see a blip and they go down a bit, but I think they're going to go up. I think gold and silver will go up with these rate hikes this year. It may not be that first rate hike, but I think the second rate hike, especially since they're talking about 4, look out. I believe you will see gold and silver rise. That's just my opinion. I'm not a financial advisor or an expert. That's just based off of what I've been reading and what I think. But I could be wrong, and I'm okay with being wrong. I've been wrong before, and I'll be wrong again. Just wait till you see my predictions for gold and silver for 2022. So there you go. Let me know what your thoughts are in the comment section below. Would like to extend a multitude of gratitude to you all for taking the time to watch, and to encourage you to please rate, share this video, comment, and subscribe.